Hi, it's Wayne from truthaboutmortgagerates.com. An update on all the turmoil that's going on. Let's update from last week, our last video. Basically, we had Fannie and Freddie and kind of the rescue there to help try to stabilize the mortgage and the housing market. Well, that just fed right into Lehman Brothers going bankrupt, then into AIG almost going bankrupt. Government coming in, basically taking 80% stake. Yes, they bailed them out, quote unquote, but taking 80% stake and getting some pretty good interest on their money, the government's going to make money on that deal, and it's good. It's too much to go into, but why AIG basically their fingers were into everything in regards to just in average person's insurance, so not looking to have something go under and people having issues with their home insurance, their life insurance, all types of things like that. And then number two, into all of the mortgage securities. They're insuring things, and if their ratings go down or they go under, that then affects all those, which again has been the problem with everything now, write-downs for all the banks. So it starts to just have a domino effect on everything because they're so big. If there was someone small, less of an issue, still an issue, but now the biggest one going under, especially when we're already in a weak system, becomes a major issue. That's why something had to be done there. Now that really then led us to the market still seizing up because they're being even more and more concerned about everything that's going on. That really led to some fear and panic in the markets. That's why last week we saw gold soaring by $90 in one day. Now all that is fear and panic. People weren't putting their money in the stock market, and they weren't even putting it into, say, treasuries and mortgage-backed securities, things of that nature. Now some money was going into very short-term treasuries, so much so that the price was going up, the rate going down so low on them that basically it was like people were paying the government just to hold on to their money because they just didn't want to say, hey, where else do we put it so we don't lose it? They're trying to get something that is guaranteed, backed up by the government. They know they're going to get their money back. They didn't care about getting a return on it. It's just, hey, I just don't want to lose it. And that, again, that leads you to fear and panic. Money going into gold like that, again, that's just when they think, here, everything else is coming down, go into a hard asset. And then buying, just because prices going up, just kept going, and then actually people could actually make money in that investment during that time, plus have the safety of going into a hard asset. All of that basically tells you that the markets are scared, they're fearful. They're never really rational, but they're completely irrational at that point in time, and that's really what led to the quote bailout, as everybody else wants to call it, but really it's what I call the stabilization of our financial system. And really it's fundamental for all of us. Whether you want to think, oh, so-and-so bank, this person, CEO, we're going to get some money. They've lost money, a ton of money so far, but I could care less really about any, these few of these people that are going to get something. Hopefully they're not going to walk away with tons of money. But bottom line, all of us have so much to lose if we don't take care of this. We're talking about fundamental part of our economy. And we remember the Great Depression. Everybody thinks that would never happen again. Well, we're looking at things that happen in the financial world that happened then and they're happening now. We have some things set up that stop some of the stuff, but we're in a situation where you start to spiral downwards. And the spiral downwards is what has to be stopped. Now, that's what Ben Bernanke and Hank Paulson are trying to get done, basically to have this plan to stop the spiral. They can't keep doing the one piece, oh, it's little Fannie here, it's the AIG there, this. You got to get it. You have to have a fundamental solution that's going to take care of the whole thing. And what they're trying to do is take all of this bad debt, get it out of the system, put it aside. Now, to hopefully then set it up, everybody can move forward. Now, here's the other thing. Everybody thinks that the government is, quote, spending this money, $700 billion. Not really. They're investing it in these securities that they're buying at rock bottom prices. Now, other times that they've had to go in and do somewhat similar things, they've always made money because they're buying at the bottom, trying to provide a stabilization, and as things improve, the value of those assets improve, and they end up they will make a ton of money on this if this goes through. Because frankly, if it doesn't, then we're looking at a real serious issue, and we really don't even want to look at what it's going to be like if we get polarized about it and over politicized about it, or want to say, hey, they're getting this or someone else is getting it, but we're all going to get benefits. Maybe there are some people that get some benefits more than others, but either we can squabble about little things like that, or we can take, hey, we want to help all of us as a whole. Really, that then leads us to kind of what is going on with mortgage rates. Well, as you can see, if you check out our report, truthaboutmortgagerates.com, we go over the fundamentals of what are the things that typically are going to go into influencing mortgage rates. Now, we've seen a lot of those things happen this past week. We've also seen some things that very rarely happen. But one of the big things is money flow, and money flowing out of stocks, out of bonds, into gold, into very short-term treasuries. That you saw, and boom, other rates moved up higher. Simple money flow. One of the primary topics we talk about in Truth About Mortgage Rates. So we had, after Fannie and Freddie, rates moving down. Then all of a sudden, Lehman, AIG, and then into kind of the called the gold panic, rates moved higher. Again, money flowing out of them. And then now, really since then, rates have been bouncing around based on what's going on with testimony on Capitol Hill. If they're liking what they're saying in regards to having the plan go through, rates go down. If then they don't, well, rates are going up. It's amazing that it's still been so volatile, back and forth, just based on what people are saying and testifying about, or what the senators are saying in any one moment. Again, it shows just how much fear is in the marketplace, how much uncertainty. Really looking for something to hang their hat on. We need to have some certainty, because unfortunately it's going to cost all of us if we don't. That's where we stand today. Rates continually kind of bouncing around. We're lower than we were a month ago, but higher than we were a week to 2 weeks ago. So we'll check back in. We'll have another update here shortly. Again, this is Wayne from truthaboutmortgagerates.com. And check out our report, truthaboutmortgagerates.com. And also, this is all the time to really start asking your question. AYMMQ, ask your mortgage meltdown question. All kinds of things that people could be asking about at this point in time. What does all this mean? We're looking to answer your questions. Until next time, again, it's Wayne at truthaboutmortgagerates.com.